Good afternoon, everybody. Before we get started today, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. So what do we have on the news front this week? Well, the most important thing that is occurring this weekend, or rather the weekend that has just gone by, is the OPEC meeting, okay, and the result of that will determine quite significantly where currencies move next. If you recall, the US dollar was trading significantly strong last time OPEC met, and then we saw a fall in the oil prices, and oil dropped all the way down to around about $29, I think, as a low. So the key things to look out from this meeting that's occurring, well, actually I'm pre-recording today's class, so for me it's Sunday afternoon, so whatever the outcome of this meeting is, it's particularly significant whether Iran cooperates with the freeze, I guess the freeze proposal of oil. So what they are proposing to do is to cease production or decrease production of oil significantly, which what in turn it will do is oil should rally if that should get voted through. Of course, Iran doesn't want to do that because they have just recently been, their embargo of trading has been lifted, and of course they want to produce and put lots and lots of barrels of oil on the market. What they will do, if that is the case, what should happen is oil and stocks should rally, commodity currencies should rally as well, and we should see a US dollar weakening. So as you can see, that significantly affects a lot of the pairs that we look at on a weekly basis, and we'll have a look at the charts, at setups that might be happening. Now, of course, we don't know what the outcome is, but we should be looking out for that. Okay, so if the message is that there's a pact in place and they've agreed to reduce significantly the production of oil, we should see those commodity currencies, stocks move forward, and we should see the US dollar weaken. Okay, so for example, if you trade in the Aussie dollar pair, we could see those levels touching towards those 80s and so forth as a result of such a move. Another news, last week, US dollar lost ground against most major currencies, and significantly consumer spending hit a 7-month low, and perhaps what most analysts believe is that they are a little bit concerned about the upcoming elections, and it's starting to show in their spending pattern. So that interest rate increase is becoming more distant than closer. So the US dollar losing ground on that front. Other important news that occurred last week was for the British pound, which they announced a replacement for one of the board members. Particularly, it was one of the more hawkish-minded board members, Martin Wheel, and so that should change the voting pattern for the pound. So in essence, it could be the market interpreted as a weakening mentality, so to speak. Alright, so if we look ahead of what's happening this week, I guess we have the ECB doing a interest rate decision over here. We can see on Thursday evening, nobody really expects the ECB to make a movement on the interest rate. So that one seems to be a little bit of a non-event, but that's occurring. For the Aussie, we have our monetary meeting minutes that have been released. We have Governor Stevens speaking, and that's about it for the Aussie dollar. The pound has got a little bit more movement. We've got the unemployment numbers, the Claremont count change. Okay, we also have the Mr. Carney speaking, Bank of England, and we have retail sales numbers. So possibly the pound is going to be a little bit more volatile than the Aussie this week. On the US front, well, we have, of course, the major news, probably by the time you're listening to this, would have already occurred, which would be the OPEC meeting in Doha that's occurring this weekend, and the oil, as I've already spoken, is going to significantly impact currencies in one way or another. Okay, but we do have unemployment numbers, claims, sorry, for the US on Thursday evening. I think this week, due to the nature of impacting news, probably ones that are going to be impacted the most is possibly going to be the GBPUSD this week. So that's the GBPUSD. Let me just write that down. I've got a different pen with me today, so it's a little bit more awkward to write, but the GBPUSD is probably the one that's going to be impacted the most by data. Alright, let's move on and let's bring up our charts and see how we are placed for this week. Okay, if we have a look at the Aussie dollar, okay, it's been trending forward. It did have this pullback over here, and we got the double fractal candle. As you can see over here, that basically we decided we were not going to trade that double fractal candle. It did move forward, and the most important thing right now is that we are at a double peak again. So we can see across here, double peak. So what's going to be interesting here is whether we break through that region forward, or we actually, that level holds for us and pulls back down. As you can see here, I'm just noticing that we're in a little bit of congestion, so I'm particularly curious to see if we exit forward or if we pull back. And I think the oil decision, how in particular with the Aussie dollar being a commodity based currency, that will dictate the path for us. So if we get the break, it could be an accelerated break and we could push towards that 80 level. Alternatively, if that level, if that inside candle holds, let's see how we start on Monday morning, and we could have an opportunity to trade a short bounce downwards. Okay, so let me summarize that for you. We're either looking for the big breaking candle forward so that we can go into this direction, or alternatively we might get an inside candle that we can bounce off the top there. Okay, alright, let's move on and let's have a look at the EURUSD. EURUSD congestion zone that we were holding broke down, and now we are technically still in the uptrend. Okay, based off this, our moving averages are still in line, so we could look for a candle setup there, but we didn't get what we were looking for. So it kind of leaves us in a little bit of no man's land. So it's a kind of trade that I really do want to go forward on, but I just don't have the setup to be able to take. So at this stage with the EURUSD, unless I get an inside candle or an engulfing candle set up to take that forward trade, I'm not willing to take it. As a breakout trade on the downside, because we are coming from the downside, it's not your typical type of breakout trade that you want to be taking. So the EURUSD, I think let's just leave this one as it stands for right now, and we'll see what the charts are saying to us next week. Let's move on. GBPUSD. As you can see, the GBPUSD is actually starting to trade in a narrower range. So we are actually getting into this region that we're getting sort of tighter and tighter throughout there. And this, I'm very what I'm trying to say is I really like this top support line, and I'm going to respect it. Any break on the upside, I am a buyer. Okay, so but I really want to clear it. That has not happened as yet, and any approach towards the line I will respect, and I'm going to be looking for a trade in the downward direction just as much as in the upward direction. Right now, because we are right in the center of congestion, I'm not willing to take any trade. The only one that I might consider, and I'll show it to you, is the following. it's almost a set of parallel lines. Okay, and if you step down a time division, you'll see it a little bit better. Let me just zoom out. If I go into a 4-hour chart, you can see it there. It's a set of parallel lines. So I'm happy to trade off this channel, but again, right now, particularly in this moment, I am right in the center of it, so that means no trade. So I will be looking for the trade again as we approach the top in this region over here. Or down the bottom as I look in the region of the bottom of the channel. So GBPUSD, we notice that there is a little bit of a channel occurring. It's occurring on our 4-hour chart, and you can see it there. When I move to my daily, you can start to see the channel, and so I'm going to respect that one there, and let's see what happens. I think that we will be able to get a nice trade out of this little slightly falling channel. Let's move on. Let's have a look at gold. Okay, gold is trading in a narrow range. It has settled down, and you can see the congestion occurring. It is quite obvious. And as we zoom out, you can see that gold is definitely falling. Now, last week we looked at possibly the start of a head and shoulder pattern. On this one, it's not the best pattern. We mentioned that it kind of, there's your head, your shoulder, here's another shoulder. It hasn't happened. In any case, let's look out for a break of this neckline, because should oil fall, then gold may follow as well, and we could get that breakdown, and we could get a nice little trade out of that. It's not set yet, but it is on the cards. Okay, so that is oil, and that is on our daily chart. It's heavily in congestion. It's looking like a little bit of a head and shoulder, so let's look out for this key break level there that I've which appears to be at around about 1210 or 1200, round about there, and let's see what we can get out of that one. Let's have a look at the US yen. Okay, I've just zoomed in. What you'll find, US yen, as soon as you wake up Monday morning and see this, you've got an engulfing candle, and the fractal will not be there, but it will be there at the end of Monday's candle. So what I'm saying is this: if we look over here, we have an engulfing candle. The red one is engulfing the little one over here, and so at the open on Monday morning, we have the opportunity to take an aggressive sell, and when this candle completes, let's say this candle completes as such, then you will have the fractal over here. However, if this candle opens and then shoots straight up like this, the fractal will never show up. It won't be there, and then we would have looked like we've entered a trade prematurely, which that's why I'm saying it's a little bit more aggressive. So the two options are: you either take the trade straight away Monday morning as the market opens, or you take it on Tuesday morning when Monday's candle has finished, to see if you have the confirmation of your fractal. So in any case, if I was an aggressive trader, I would be in on this trade Monday morning at whatever the open is. Okay, so that's US yen. Let's move on. Okay, Euro Yen, as you can see, that hot spot that we marked out last week, and we've had the trading range for the whole of last week being very tight in here, and it looks to me that we are about to test this. So look out for a big break like this, which will set up the trade for us to go in this direction. Okay, generally speaking, from experience, when the market approaches a key level like it has here, and it hovers and hovers and hovers and tries, if it doesn't kick away soon, what you'll find is that it will break straight through. Now, I'm not prepared to take a trade right now, but if I do get the breaking signal candle, I will be on this trade. Okay, so Euro Yen, we're looking for a candle that clearly takes everything out It's a very bearish candle with not much wick at all, and then your entry will be the following candle thereafter. Alternatively, if we do come down to this region again, let's say we get a candle that kind of looks like this, and then we get a nice inside candle, you may attempt to trade the bounce, and it would be considered a double bottom. However, because this one here may have been the actual double bottom, and this is just that sideways movement, indecision, usually it will break in this direction. That's just from experience, but let's just look at it. So the more probable trade on the Euro Yen is a breaking down, but make sure you get the correct candle set up before you jump on that one. Let's move forward. Let's have a look at the Kiwi dollar. Okay, as we look at this chart, I can see that I've drawn this bottom line. Okay, this bottom line looks fairly strong to me, and it looks like we are in uptrend. So the things that I'm looking out for is a clear break of the bottom line that will signal a movement back down. Now remember, again, you know, the Kiwi dollar is a commodity currency as well. So what I'm looking for is if we get something like this, then we could shoot it right back down. That's option one. Let's wait and see. The other option is that I've drawn this top level, and the market is driving up, driving up, driving up. So let's see if it breaks above. However, from the more powerful pattern is let this drive to here and then break downward. That is the more powerful pattern. It's the more probable pattern. However, if you do get a clear bull candle in the forward direction, remembering that we are close to the 70 level, which is a decade number. This top level here is at 69.59. We're very close to that 70. The 70, that decade number, meaning it generally brings in new players into the market, and we can get a little bit of resistance over there. So it may take one or two attempts before we shoot through that 70 level. Okay, so it is more probable that the break will come on the downside. However, we will take both options. Let's move on. Okay, the Euro Aussie, after we got stopped out on a nice inside candle over here last week, we saw a second one. We got stopped out on this one. We saw a second one which formed over here with the moving averages right on the limit of what we would accept, and consequently just shoot straight down and basically give us the trade that we were looking for 2 weeks. So hopefully some of you took that. If you got stopped out on the first, you got all your money back on the second and then some. Okay, so that's what trading's about, probabilities. Now we're coming up to a region of what we call a hotspot again, around this area over here. So we need to see if we are going to possibly get a bit of a bounce in this direction, or if in fact we will continue to drive down. So with the Euro Aussie coming off a winning trade, we just need to wait and see for the setup, and let's see if we can pull the trigger and possibly get another one on the Euro Aussie. Let's carry on. Okay, we have the Aussie 200, the index, and we saw significant rally over the last week. We did have an inside candle there, but basically this one here is non-tradable. We had no reason to take a trade off that particular point. So looking at this chart right now, I can't really draw any significant lines on this one, and I just need to wait and see what occurs at the previous recent highs that we made, which is around about that 52.30 level, or 52.20, 52.30 level, and let's see what happens over there. So at this stage, Aussie 200, we'll just leave that one alone, and there are better opportunities, so this one, let's just leave it alone. Alright guys, again, this was a pre-recorded class. I am away, I'm in a pretty remote area, so hopefully you get this on time, and I should be able to see you all next week live. Thanks for listening. I'll speak to you then. Bye for now.